Samvat 2080 was a great year for India's equity and financial markets. The broader index saw an appreciation of more than 25%, and the mid and small caps actually saw a much higher appreciation. Investors have been very well rewarded by the stock markets in this year. It also validates a deep belief I have had for the last 20 to 30 years that India as a nation has to move from being a nation of savers to a nation of investors. And I am happy to see this transformation of the Indian saver into the investor, which creates the backbone for the economy to have the risk capital for its future growth. As we look at this critical juncture of the India transformation story, India now is in a unique position where, after the United States, it has the chance to be the second most popular and deep capital market in the world. But along with broader and deeper capital markets comes significant responsibility for practitioners, policymakers, and investors themselves. It is time for investors to also be careful about where they invest within the markets and do not have an approach of one size fits all. What do we need to do to make this a sustainable capital market for India? First, we have to be aware that a large number of investors are first-time investors post-COVID. They have only seen ups and not the downs of the capital markets. Therefore, this is a marketplace and it can go up and it can come down as well. Second, I think the time has come for India now to really leapfrog itself as the top 3 economies in the world in the next 3 to 4 years. For that, there is a lot of ground which has been covered, and I compliment the government and the regulators for deeply and dramatically giving macroeconomic stability and sustainability to the India growth story. This lays the foundation for a continuous growth. However, as I look at this point of time, there are 3 areas where India needs to really focus on for a sustainable Indian economic and financial growth story. One, while the macro is great, many companies and businesses find challenges in micro. It is a continuous exercise for us to improve ease of doing business for sustaining the micro growth story. The second, and this is where capital markets have done a wonderful job, is let many flowers bloom. We want to see many success stories from Indian businesses and widely spread for a sustained capital market and a sustained economy. The growth of the Indian economy cannot be dependent only on a few large companies and groups, but should be spread across the length and the breadth of the country. And the third and the most important is Indian companies must get more competitive on the global scenario. Indian companies should not be pushing for protection, but competition. And the ultimate test of capitalism is pro-competition and not only pro-business. I moved to 2081 with a sense of cautious optimism, keeping in mind global geopolitics, which is deteriorating. The India macro story is strong. We need a continuing focus on the micro story. And along with that, I think we have to keep an eye on some of the parameters, including inflation, India's fiscal and current account deficits, which at this stage are under control. So all in all, optimistic about the future, but would caution the investors for ups and downs and volatility of the market, which will inevitably come in Samvat 2081. All the best and a happy Diwali and a wonderful new year to all. Thank you.